Sahad Washington here, licensed mortgage loan originator, NMLS 1446971. Today we're going to talk about the top 10 most common deal killers, things that can really mess up your mortgage transaction and even kick you out of eligibility status when you're in the process of buying a home. I tried to put these in order from most offensive to least offensive, but really it depends on you and your personal situation. So let's go. Number 10, changing banks and financial institutions. When you changed banks and open a new account, it can take a whole 30 days before you get that next statement. If you're in the middle of a mortgage transaction, you may not have 30 days for us to wait for you to get a new mortgage statement. So, best practices, stick where you're at, don't make any changes. Number 9, undisclosed spouses. This one is actually very, very common where borrowers will apply for a mortgage, get pre approved, go through their process, find a house, and then once we're under contract, way towards the end, we find out that they are actually married. Now, depending on what state you live in, this could complicate your mortgage process on you purchasing a home, or if you're doing a refinance and they have to sign themselves off of the deed, you're going to need that person's cooperation. So don't keep that information from your loan officer. If you are married, put that you are married. If you are unmarried, then you're unmarried. Moving right along, time off of work and changing your work schedule. This really impacts those that are W 2 hourly employees. That's not to say that it can't impact anyone else, but if you are a W 2 hourly employee, this is going to have the most impact on you. Don't make changes to your work schedule. If you applied for your mortgage and you were qualified working 40 hours a week, don't go down to working 30 hours a week or anything less than where you got qualified. Don't change from full-time employee to part-time employee so that you can do something else, because that is a big difference from being a part-time employee and being a full-time employee working a set schedule. And we will talk about that in another video. Number 7, the IRS and government affiliates. If you owe the IRS or the federal government or any of the affiliates any type of money, or you're in default with them, it is going to come up. So make sure that you disclose it in the beginning when you are asked about it on your mortgage application. Make sure that you talk to your loan officer about it in detail so that we can advise you on what to do in this situation, or let you know in the beginning, hey, this might be a hard stop. The only thing worse than a no is a slow no. So let's talk about that in the very beginning. Number 6, cash deposits. When you keep cash on hand, also referred to as mattress money, and then you take that money and you deposit it into your bank account, that is considered a cash deposit. And in a lot of cases, that can be a big no no. So talk to your loan officer if you have mattress money, cash on hand, and you are thinking about depositing this money into your bank account while you're in the middle of your mortgage transaction. Don't do it. Let's talk about it first. Number 5, and this one is, I would say that this should be common sense, but a lot of people do it just because they're unfamiliar with the mortgage process. Do not co sign for anyone else while you're in the process of getting your mortgage. If you co sign to help someone out, you are taking responsibility that in the event they don't pay this bill, that you're going to be responsible for it. Don't co sign for anyone while you are in the middle of your mortgage transaction. If you've already co signed for someone and it's already showing up on your credit report and your loan officer has seen it, talk to your loan officer about, can this be excluded? A good loan officer is going to ask you what it is and can we get it out of your debt if someone else is paying it. But don't co sign for anybody else's debt. No cars, no scooters, no anything. Don't co sign. Number 4, not disclosing properties. Okay. I'm going to use timeshares and vacation homes. A lot of times, people do not think that a timeshare or a vacation property that you might have got while you were out, in the Caribbean counts as a property. However, it does when you are in the process of doing a mortgage. If you are responsible for making a payment on this property every month or every quarter because it's a timeshare, something like that, that's a property in a lot of different cases, or it is at least a debt that needs to be counted against you. So, not disclosing properties. The next one, very similar, undisclosed debt. So there are some things that will not show up on your credit report that you are responsible for paying each month. Here's a perfect example. If you use quad pay, what are all those? You can break it down into 4 payments or 5 payments, 6 payments, right? Now in mortgage world, even though we know that's a set number of payments, we may have to consider that against you if it's over a certain amount of payments. So this is an undisclosed debt because this is not going to show up on your credit report. So I won't see it there unless you tell me about it, or if I see you making payments to it on your bank statement. That is a lot of the times how we find out that you have debt that you didn't tell us about because we see you making payments to something that's not on your credit report. And that's where we cross reference. So if you have debt that you're responsible for, make sure that you talk to your loan officer about it. Number 2, and this one has always been a peak of frustration for loan officers, introducing new accounts. When you complete your mortgage application, you're going to be asked to put in your bank account information. Which accounts are you using to purchase this home? Okay. If you transfer money from one account to another account that we don't know about, or we see money coming in from another account that you own but was not disclosed to us, you now have to give us bank statements for that account. You have now introduced a new bank account into your mortgage transaction. And we didn't initially know about it because you didn't tell us about it or we didn't need it. But if there's transfers going in and out and we can see the money, hey, what's this account over here that you're transferring money from? Oh, that's, an account I have at another bank. Great. I now need bank statements for this other bank account that we didn't know about because you introduced us to this account. Don't transfer money in and out of accounts that are not included in your mortgage transaction. And number 1, opening new credit. I cannot tell you how many times I have instructed clients do not open new credit. And before they go to settlement to get the keys to their house, they went to a sale at the furniture store and they are buying new furniture for their brand new house. Okay? I hope that you can sleep in that sofa and it is a roof over your head because that furniture you just bought now has to be added to your debt. And if you are already close to your debt limit, that payment on the furniture can push you out of qualifying for your house. If you have a credit card and you go run up a credit card buying stuff for your new house, you now have made changes to your debt. Don't open new credit and don't use the credit accounts that you have. Don't run them up excessively. If you need to make a purchase and you need to put it on credit, talk to your loan officer first because these are things that can really hurt your transaction and potentially make you lose the house. You won't qualify for it anymore. So that's my top 10 list. There's a lot of things that can happen while you're in a mortgage transaction, but these are the ones that are 100% avoidable if you listen to your loan officer and don't do any of these things. It's been great. Thank you guys. Hopefully that information helps you when it's your turn to go through your mortgage process.